Welcome to the world of crypto trading. In this ever-evolving financial landscape, cryptocurrencies have emerged as a revolutionary force, transforming the way we think about money and investments. The world of finance is changing. Traditional financial systems are being challenged by these digital currencies which offer a new level of accessibility and transparency. A new player has emerged: cryptocurrency. These digital assets are not just a passing trend, they are here to stay and are reshaping the financial world. Bitcoin, Ethereum, and many others offer exciting opportunities. Each cryptocurrency has its unique features and potential, making the market diverse and dynamic. This essay will be your guide to understanding crypto trading. We'll break down complex concepts into easy-to-understand segments, ensuring you have a solid foundation. We'll explore the basics, from defining what crypto trading is, to discussing various trading strategies and essential tools. You'll learn how to analyze market trends and make informed decisions. Let's embark on this journey into the exciting world of crypto trading. Cryptocurrencies are digital assets that have gained immense popularity over the past decade. They use cryptography for security, ensuring that transactions are secure and private. This technology is what makes cryptocurrencies so reliable and trustworthy. They operate on a decentralized system, free from traditional financial institutions. This decentralization is a key feature that sets cryptocurrencies apart from conventional currencies. This makes them attractive to many investors and traders. The potential for high returns and the ability to trade 24/7 are just a few reasons why people are drawn to crypto trading. Are you ready to learn more? Let's dive in. Together, we'll navigate the complexities of the crypto market and unlock the potential of this exciting financial frontier. Crypto trading involves buying and selling cryptocurrencies. Traders aim to make profits by exploiting price fluctuations. They buy low and sell high, just like in traditional markets. However, crypto trading has its unique characteristics. One key difference is the 24/7 nature of the crypto market. Unlike traditional stock exchanges, crypto trading never sleeps. This allows for greater flexibility and more trading opportunities. Additionally, crypto trading is highly volatile, which can lead to significant gains but also carries inherent risks. While often used interchangeably, investing and trading are distinct approaches. Investing involves holding cryptocurrencies for the long term, hoping their value will appreciate over time. It's like planting a seed and watching it grow into a tree. Trading, on the other hand, focuses on short-term profits. Traders capitalize on daily price swings, buying and selling assets within shorter time frames. Think of it as buying and selling goods at a market, aiming for a quick return. The crypto market is a vast and dynamic landscape. It operates 24/7 with prices constantly fluctuating. Bitcoin and Ethereum are the two most prominent cryptocurrencies, often referred to as the blue chips of the crypto world. Market capitalization is a crucial concept to understand. It represents the total value of all coins of a particular cryptocurrency in circulation. A higher market cap generally indicates a more established and less volatile asset. However, the crypto market is still relatively young and highly speculative. New cryptocurrencies emerge regularly, each with its own unique features and potential. Section 5. Riding the waves of volatility. Volatility is the heartbeat of the crypto market. Prices can swing dramatically in short periods, offering opportunities for substantial gains and losses. This volatility stems from various factors: news events, regulatory changes, technological advancements, and even social media sentiment can significantly impact prices. While volatility can be intimidating for beginners, it's this very characteristic that attracts traders seeking to profit from rapid price movements. Understanding and managing risk is crucial in such a volatile environment. Section 6. Strategies for success: day trading, swing trading, and scalping. In this section, we will explore 3 popular trading strategies used by traders to navigate the volatile cryptocurrency market. Traders employ various strategies to navigate the crypto market. These strategies are designed to capitalize on different market conditions and time frames. Day trading involves executing multiple trades within a single day, aiming to profit from intraday price fluctuations. This strategy requires a keen eye on the market and quick decision-making skills. Swing traders hold assets for a few days to weeks, capitalizing on short to medium-term price swings. This approach allows traders to take advantage of market trends without the need for constant monitoring. Scalping is the most rapid strategy, with traders aiming for small profits from numerous trades within very short time frames. Scalpers need to be highly focused and able to execute trades quickly. Each strategy has its own risk profile and requires different levels of time commitment and expertise. Day trading can be intense and time-consuming, while swing trading offers a more relaxed pace. It's essential to choose a strategy that aligns with your risk tolerance, trading style, and available time. Understanding the nuances of each approach can help you make informed decisions and improve your chances of success in the crypto market. Section 7. Essential Tools for the Crypto Trader. Having the right tools is crucial for success in crypto trading. Cryptocurrency exchanges are platforms where you can buy, sell, and trade cryptocurrencies. Binance, Coinbase, and Kraken are a few popular options. These exchanges act as intermediaries, connecting buyers and sellers. Charting tools are indispensable for analyzing price movements and identifying trading opportunities. They provide graphical representations of price data, technical indicators, and drawing tools to help you spot trends and patterns. TradingView and Coinigy are examples of popular charting tools used by crypto traders. Section 8. Your first steps into crypto trading. Embarking on your crypto trading journey can be both exciting and daunting. The world of cryptocurrencies is vast and ever-evolving, filled with opportunities and risks. As a beginner, it's essential to approach this new venture with a well-thought-out plan and a willingness to learn continuously. Here are a few steps to get you started. 1. Educate yourself. The first and most crucial step is to build a solid foundation of knowledge. This means diving into books, online courses, and reputable websites that cover the basics of cryptocurrency and blockchain technology. Knowledge is your best asset. The more you understand the underlying technology and market dynamics, the better equipped you'll be to make informed decisions. Don't rush this step. Take your time to absorb as much information as possible. Invest time in understanding the fundamentals of blockchain technology, different cryptocurrencies, and trading strategies. Familiarize yourself with terms like decentralization, smart contracts, and mining. Each concept plays a vital role in the crypto ecosystem. 2. Choose a reliable exchange. The platform you select for trading can significantly impact your experience. Look for exchanges that have a good reputation, offer a user-friendly interface, and provide robust security measures to protect your assets. Select a reputable cryptocurrency exchange that offers a user-friendly interface, robust security measures, and a wide selection of cryptocurrencies. Some popular exchanges include Coinbase, Binance, and Kraken. Each has its pros and cons, so do your research before committing. 3. Start small and practice risk management. It's tempting to dive in head first, but it's wiser to begin with a small investment. This way you can learn the ropes without risking significant capital. Begin with a small investment amount that you are comfortable losing. This approach allows you to gain practical experience and understand market behavior without the pressure of large financial losses. Crypto trading involves risk, and it's crucial to manage it effectively. Develop a risk management strategy that includes setting stop-loss orders and diversifying your portfolio. 4. Stay informed. The crypto market is constantly evolving. Prices can be highly volatile, influenced by various factors such as market sentiment, regulatory news, and technological advancements. Stay up to date on industry news, regulatory changes, and technological advancements. Follow credible news sources, join online communities, and participate in forums to keep your finger on the pulse of the market. Remember, crypto trading is a journey, not a sprint. Success doesn't come overnight. It requires patience, discipline, and a willingness to adapt to new information and changing market conditions. Patience, discipline, and continuous learning are essential for long-term success in this exciting and ever-changing market. Embrace the journey, stay curious, and never stop learning. Your dedication and effort will pave the way for a rewarding experience in the world of crypto trading.